Hey everyone, welcome back to the another episode of Penny Calling Penny about the fundamentals of investing. And in this episode, we are going to discuss about the various method by which you can start investing in stock market. So let's get started with the first one, which is individual stocks. Now this involves buying and owning of individual stocks from the company which are listed in the stock exchange. The buyers can buy and sell these stocks as they wish. Usually they take advantage of the fluctuating price to generate the profit out of these stocks. Moving on to the next one, which is mutual funds. Mutual fund is a pool of money which is collected by a number of investors, and these funds are then managed by a professional fund manager. Now this professional fund manager invests these funds into a variety of stocks and diversify the portfolio to minimize the risk and to maximize the profits of the investors. Moving on to the next, which is exchange trading fund, usually known as ETFs. Usually the ETFs and the mutual funds are same, but they are traded on the stock exchange of the individual stocks. Usually they track a particular index or a sector and then provide the same diversification benefits as the mutual funds. Now another one is index funds. Now the index funds are the mutual funds or the EFTs that track a particular stock market index such as S&P 500. These index funds offer a broad market exposure and lower fees as compared to the actively managed funds. Coming up to the next one, which is option trading. The option trading involves buying and selling contracts. These contracts give power to the investors to buy or sell their stocks at a specific price. So these can be used to hedge against the market risk or a speculative strategy to earn more profit. Let's talk about the dividend reinvestment plans, known as DRIPs. Now the specialty about these dividend plans are that they allow the investor to reinvest their dividends into the stocks of the same company so they can grow their portfolio over a period of time. Moving on to the next one and the most updated one out of these is the Robo-Advisor. These are the online investment platforms that uses technologies, algorithm and computer application to invest your fund into the diversified stock portfolios. Now the specialty about these Robo-Advisors are that they offer you a lower fees, and these are ideal for the new investors who don't have much knowledge about the stock market, stock portfolio, market analysis and trends in this field. So these were some of the most common and important methods to invest in the stock markets. Stay tuned with the Penny Calling Penny to understand more about the fundamentals of investing, and hit that follow button to never miss an update from Penny Calling Penny.